All right, let's talk about gold and oil today. Yesterday, gold, we were, up in here and we talked about price pulling back a little bit, possibly into this structure line. That's the top of an order block, but probably not giving up much more than that before continuing higher. We basically stayed in a horrible trading range all day long for the gold before overnight breaking out to the upside and taking out highs. We have pulled back since then. So let's dive in a little bit closer. As you can see, we're in a pretty good uptrend right here. This is a very nice bullish curve that's moved and taken out these highs over here to the left. Can't see why we do not continue higher. However, just like I was saying yesterday, we could give up a little bit of this and then continue a lot higher because clearly price doesn't move like this and it doesn't move like this. It moves like that all the time. And sometimes these pullbacks can be deeper and then snap higher. It happens all the time like that, right? So let's dive into this little area that we looked at yesterday and see what happened. Let's drop back into the 15-minute chart. Yesterday around 6 o'clock, we were around this 6 in the morning, 7 in the morning, we were around this area right here. We were talking about price breaking down. And if we lost this, I was expecting it to come on down into this structure. We did end up like touching through these wicks right here, as you can see, but we didn't make it all the way down to the actual order block that I was looking at on the 15-minute chart. If we look at on the hour, you can see price getting into these wicks a little bit heavier, this little area of structure, and then obviously touching the 50 and then moving back up. We'll talk about these moving averages here in just a minute. But let me actually go ahead and take them off. The blue is the 8, the red is the 21, and the purple is the 50. We'll talk about those in just a minute. And, kind of how I'm using those. But price came down and then moved back up to the top side, taking out highs. Let's go back into the 15-minute and talk about yesterday's price action. So we talked about it giving up a little bit, maybe down into here before snapping higher. It didn't come as low as I wanted to, as fast as I wanted it to before going higher. So trading in this all day yesterday, which I did not, but would have been absolutely awful. So this range right here would have been, for some traders, pretty predictable, and they would have made a lot of money. For a lot of traders, you'd have been trading these breakouts. You've been trading those breakouts, and you would have been losing your butt. You probably have been trading around the 50% area of it. So wanting this as a turnaround down to break through here, and you probably got stopped out. Things like that during the day, I see would have happened quite a bit. So this was kind of a shakeout of this huge move up to get people out of their trades. People on this large run that's been happening on gold. So right in here, you probably had people trying to save profits and moving those stops all the way up into here, wanting it to make new highs. So they were probably putting their stops in at pretty good areas of structure, right? So below here, and it just kept tapping it. And then eventually overnight, we did make that new high. And again, I don't see why we don't continue closer to 2000 up here, right? I don't see why that price doesn't continue to run. Now, does that mean we're not going to have a pullback? Does that mean price isn't going to come all the way back down in here? Absolutely not. We do have nice liquidity right there. We do have nice liquidity obviously situated here, along with that order block still in play. So price could easily work its way down into this area, get into that order block right there, maybe even the Monday high, and then eventually make its way back to new highs. This may take another week, and that's perfectly okay because honestly, how many people are actually taking long-term buys up in this area? If you are, you're not trading very well. So to see a big pullback after a large run up right there will make a lot of people happy. And then you'll see a lot of people start jumping on board and accumulating longs in these areas for price to then push back to the highs. So be patient. I would be patient and see what price gives us today. I'm still bullish on gold. Not to say that I wouldn't take a short, but bullish on gold. If price breaks through this structure and continues down below the daily price line, gives us some type of consolidation, a return up, and then a push down again, then yes, shorts could be had right there. You could target this low. You could target that order block. You could target the Monday high that's down there. So look for that. However, price could hold this area right here just nicely and break up. And then I would be looking for a pullback and then longs, targeting that high, targeting probably the 2000s. Maybe not the 2000s today, but definitely have my eye up there, trailing my stop as we go. So when it does break back down, I'd go ahead and take and lock in those profits. So honestly, I'm bullish on gold, but could see a pullback. So patience, really. Don't know if I would take any shorts. I would just be waiting for price to get into an area that I wanted it to get to so I could take buys and then play the run up. So just be patient with gold. All right, let's talk about oil. Oil yesterday, when we were talking about oil, we had just made this run up through the Monday highs, taking out that structure. So we had a little bit of a pullback. I think we were talking about price coming down a little bit further, getting back into some of this inefficiency. I did not think we would give all of it back up. So to make this run back into that order block right there, which is what that black line was, I think was the actual thought process that we were going through yesterday in the analysis. So it did pull back into some of this inefficiency right there at that structure, and then immediately snapped up for some good gains in the morning. And then all afternoon was just a sell-off in oil. So whatever bullishness was in the market here is completely gone there. We broke through this structure. We are trickling back to the top side and what looks to be a little bit of a channel. I don't think I'd trust that. And if you look at it closely, do believe we got possibly a head and shoulders coming in to play there. And if we treat this as the neckline, then I want to measure from the bottom of the highest candle here as far as the close go. And this is my measurement. If you with head and shoulders, I measure from the bottom of the highest candle close, which is that guy, to the neckline, which would be a line that's from here to here. So this would be wherever it lands, kind of right below that candle. And that would be the measurement I take. So having said that, I'm going to take that, put it right there at the bottom of that candle, and come down in a straight line right there. And it meets that neckline. So you're looking at about 140 points. Is that what it is? 1.50, $1.50. So basically a 1.5. And then you would take that measurement from wherever we end up breaking that neck or wherever you enter. And then 1.5 would be the target pretty much. So roughly that range is what I would be looking for in a trade on gold if we were to confirm this as a head and shoulders. And if we do break down, I would look for a pullback and then a continuation, and that's where I'd be entering. So somewhere around that daily price line looks like a very good spot to be trading oil short if you want to do something like that. So, and then that would just kind of put us back in this range down here, the Monday median to the Monday low. That would put us back in that range to end the week. And, that's obviously a viable option. This could be the weekly high. And then we could probably even make a new weekly low and drop down below that. So bearish on oil, bullish on gold. We'll see how that works out because I can see them kind of moving in tandem with one another. And it really, also depends on what the dollar is doing. And, so I can see the dollar looking a little bearish today right here at this daily price line. We closed that gap up again. So look at the 4 hour. kind of push back up in here. We made that pull back into structure, ran back up a little bit and just getting stuck. So, I mean, looking at this, I would assume a little bit of a grind down. The news is coming out here in about an hour. We do have existing home sales, a couple of things on the news, manufacturing numbers, things like that. So, depending on those numbers, which I think existing home sales will probably be about at the number, so it'll be neutral. And then manufacturing sales probably be slightly red. So I can see a little bit of a pullback in the dollar that would work to that narrative. And then possibly working in a range for the rest of today, maybe even tomorrow. But we'll see. And Euro USD, just real quick. On the 1 hour, let's go to 15-minute. I can just kind of read price a little bit better on the 15-minute. All right, so looking a lot like gold there, right? We took out lows here, got down to this structure, and then turned around, made a push to the upside overnight, just like gold. Did not break these highs and started working our way back down. So this looks somewhat bullish. I like the fact that we come down here and we've held down at this structure, right in here at this structure, right here at this structure. So yeah, I like the euro to the upside. Let's take out these highs, possibly even those. We got some inefficiency that lies above these highs right here. So yeah, price could I can see price coming back up. It's doing it right now on the 15-minute chart. But yeah, I can see price continuing a little bit higher, breaking these highs and getting into that liquidity up there. So, all right, well, I think that's going to be for today. Gold, oil, a little bit of Euro USD, a little bit of dollar there. Good luck today. Be safe.